Hello traders, and welcome back to another episode of my YouTube lesson. What are we going to learn today? Today our topic is 5 things you should consider before entering a trade. So I know a lot of traders who open their charts and get confused as to whether to start buying or selling, and also most traders don't even know if a price is moving in an uptrend or a downtrend. So as to whether to take a buy or a sell, they become confused. So in today's lesson, that's what I'm going to take you through. The 5 things you should consider before entering a trade, or the 5 things you should look out for before entering a trade. So the first thing you should look out for before you place a trade is market structure. Now with market structure, we have 3 types of market structure. We have the uptrend, we have the downtrend, and we also have the sideways or the consolidation. Now in an uptrend, we look for buying opportunities. In a downtrend, we look for selling opportunities. And then in a consolidation market, we look for buying at the equal low and selling at the equal high. But I'll advise that when price is consolidating, you don't take any action. Like the popular saying goes, the trend is your friend. So when you look at this chart over here, you can see that price is moving in an uptrend, because we have this price is moving in an uptrend, and we have this high here. We have this high here, we have this low here. Price moved up to form a higher high. We have a higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So what are we going to look for? We are going to look for buying opportunities in an uptrend. And in a downtrend, we look for selling opportunities. So we have a downtrend here. Price is forming a series of lower lows and lower highs. So anytime we have price moving in a downtrend, we look for opportunities to sell in a downtrend. And in a consolidation market, we buy at the equal low and sell at the equal high. So this is our equal low and this is our equal high. So in a consolidation market, we buy at the equal low and sell at the equal high. But I would advise that you stay away from a consolidation market and then wait for the market to move in a trend, either a downtrend or an uptrend. Now let's move to the second thing you have to look out for before you take a trade or you enter a trade. The second point, or the next thing you have to look out for, is your key levels or area of value. So your area of values can be your support and demand zones, your trend lines, your demand and supply zones, moving averages, and so on. Now when you look here, when you look on this chart, you can see that we have a demand zone around this area. Price has broken structure. We also have an imbalance left behind. Price came back into that zone, and then we had the buyers pushing price upward. Now when you look at this area too, I have my resistance and support here, where price broke out of the resistance zone, came back for a retest, forming a support zone, and then move upwards. Also at this side, we have another resistance and support. You can see that price has broken out of the resistance zone, resistance and support zone, and then came back for a retest on that same zone again, and is moving upward. When you look at this side too, you can see another resistance zone here. So all these zones are now my key points or points of value. Now anytime price gets into any of these key points or point of value, does not mean that you have to start taking trade immediately. You have to also look for price actions around that key zones before you enter a trade. The third point, or the third thing you have to look out for before entering a trade, is your entry trigger. So the entry trigger depends on the strategy you use as a trader. Now some of the entry triggers we have, or the confirmations we have, are break of structure, break of trend line, candlestick pattern, current trade line break, current resistance break, loss of momentum, and a whole lot. That is why I said that it depends on the kind of strategy you use as a trader. Now let's look at this this current price over here. You can see that price is moving in an uptrend. We've been able to spot our key levels or area of value, and we are now looking for an entry. So before this price moved to the downside, you can see that we have this engulfing candlestick over here. We have this bearish engulfing candle. This candle has engulfed this one, telling us a lot. And this engulfing candle happened on this resistance zone, which is already telling us that price is reversing to the downside. So you can see the fall from this point to this point. You can see that price has moved from this resistance zone to this new key level. Now on this new key level, we are waiting here to see what price action will be formed around this area. Now when price got to this resistance and support, you can see that we have another engulfing candlestick, another bullish engulfing candlestick. This candle has engulfed this one and closed above this candle. This is already telling us that price is reversing to the upside to continue the bullish move. Aside that, look at all this candle, this pin bar, look at also this bullish pin bar, which is already telling us that the bulls are still taking over the market. So these are some of the entry triggers that you should look out for before entering a trade. The next thing you also have to look out for is the news. That is the economic calendar, to see if we have any news on that day. The reason why I am saying that is because you are trading one currency against another, that is trading one country against another. So you have to find out whatever is going on in that country. I usually use the investing.com. So this is my investing.com. I have a full video on how to set your investing.com and how to use investing.com to trade. Okay, how to trade the news using investing.com. So as of today, this is the news we have news on USD. We also have news on Japanese yen. Now one may ask, is it good to trade the news? If you are a beginner, I would advise that you stay away from the news, because most of this news may cause the market or may cause price to move rapidly by either taking away hitting your stop loss or making you make money. But then I will advise that you stay away from trading the news. It's good to always remember this: missing money is better than losing money. Now when you check your calendar and you realize that we have this high impact news like the NFP, we also have the CPI and so on, then you stay away from the market. But if you are a pro and you think you can trade the news, you can go ahead and trade the news. But if you are a beginner, I'll ask that you stay away from trading news. It's better to miss money than to lose money. This news can move in 100 pips, in 150 pips. You can just allow those pips to slide and then you wait for the perfect time to take your trade. Before we move to the fifth point or the last point, hit on the thumbs up button, leave a comment below, and also subscribe if you are loving this lesson. Now the fifth point you have to look out for before you enter a trade is your exit. So your exit when you are right and your exit when you are wrong. That will be your take profit and your stop loss. Now when you look at this trade over here, I have my area of value, which is my demand zone around this area. Now on the area of value, you can see that we had this rejection after price has moved down to this area of value. We had this rejection towards the upside, this rejection candle, which is our pin bar towards the upside, which is already telling me a lot. So the next thing I'll have to do is to pull out my long position tool and then drop it here. So immediately this candle close, I am entering my buy trade, or I'll move to the 1 hour time frame or the 30 minutes time frame and look for my current resistance break, which is also another topic I'll be teaching in my subsequent lessons, or my lessons that will be coming up. I'll be teaching this topic, current resistance break. Now when this happens, what will I do? I'll just pull out my long position tool, because this is where I'll be taking my entry. Then my stop loss will be below the current low, which is this side. So this is where my stop loss will be, a little below the previous low. Okay, a little below the previous low, and my take profit will be at the nearest support or resistance. So my first take profit can be here, and then from here I can take partial or break even. Then my second take profit would be at this previous resistance zone, because price can move to this side or price can just get here and reverse. So my first take profit to be here. So my first take profit will be almost 1:3, which is a very good risk to reward, and my second take profit will be 1:6 or 7, which is also a very good risk to reward. Now, if you want to learn how to calculate your risk to reward, the lot size you have to use on each trade and how much you'll be risking, I have a video on that also. You can also check it out. So this is where my exit will be, and this is where my entry would also be, and you can see the reaction of price after I've been able to indicate where my stop loss and my take profit will be. So that is the last point, or that is the last thing you have to look out for before you enter a trade. Thank you for joining me on this lesson. Don't forget to subscribe and also leave a comment below. See you in the next lesson, and peace out.